Ladies and gentlemen, thank you for joining me. This is Christopher Aaron. It is May 11th, 2016. We will be covering the latest action in gold and silver today, and we are also going to do something a little bit different, which is to look at an historic example of volatility that we have seen across certain segments of this sector. There are a lot of people who have started to express interest in the companies that mine for gold and silver, and I absolutely believe that there are merits to both ways of investing. For example, this is one of my favorite coins here. You can see next to one of my favorite cactus plants, and this coin I bought when I was in Australia in 2009. I was traveling there and I thought gold was about to break higher from 1,000, and I bought that right around that time, and sure enough, gold really hasn't looked back since then. So I believe there are merits to both, but the volatility that is going to be coming into the mining sector for anyone who is interested in that is going to be very intense, and I'm going to show an example of that so that we can be prepared, because this is serious stuff. There are truly life-altering opportunities according to the metrics that I'm paying attention to. And if you're interested in that, you need to be prepared. So we'll look at all that today. Thanks again for watching. So as we begin today, we will look at first the spot prices for gold and silver as we usually do. If you are new to this style of chart right here, the first one that we always look at is the past 3 days. So the different colors here, we have turquoise. This represents 3 days ago. In other words, the action on Monday. Red is 2 days ago, or yesterday, the action on Tuesday. And the green is today. And we are looking at East Coast United States time. I am in the greater Boston area, and we are generally going by New York time when we look at these charts. So we can see the price of gold got closer to that 1305 level toward the end of last week, and then backed off significantly on Monday, based a little bit on Tuesday, before somewhat of a rebound today. We will put this into perspective just so we can see how this is shaping up. When we flip over and look at silver, we can notice a similar type of action for the last 3 days. So a big decline in silver on Monday, coming back below $17 per ounce on the spot price. A nice basing day on Tuesday, a slight rise as we get into the overnight hours in Asia. This is something to pay attention to if you happen to be checking these charts overnight. Oftentimes, if there's even a smaller surge like this in Sydney or Hong Kong, it tends to mean that the price of the metal is going to continue accelerating into London. And then, of course, we have the New York Open, which in this case marked the absolute high. Now, of course, there is some manipulation in precious metals. Was this manipulation today? I don't know. It could have been. The price came down right as New York started by about 30 cents before recovering a little bit into the close. So it's difficult because you can have a trend in place and then all of a sudden New York opens and boom, it crashes. On the flip side, we will see days increasingly over the next few years where we see these massive spikes up higher in New York. So let's not think that it can only be one way here as we're watching this. Looking at gold on the 1 year time frame, 1.5 years really, here's the action that I'm seeing in gold right now. For a bit of a background, the channel here that we're looking at in turquoise was the 2.5 year downtrend channel. Let's remember this broke decisively in the beginning part of this year. And what we have now forming is what we can basically refer to as a gentle sloping uptrend. We had somewhat of a consolidation, a little bit of a surge higher out of that, a drop back down, more of a consolidation for March and April, a surge back up to right at that 1305 level before falling back down the last few days. Now the 1305 level is very significant because we are looking at this as the resistance level back from, you can't see it below here, but this was back from January of 2015. So we're hitting this resistance zone labeled right here, exactly where we expected. We said, if you followed some of the videos from a few weeks ago, that there would be sellers that show up at this level. So that's what we're seeing right now. So all in all, it looks like there is a gentle back and forth kind of uptrend forming. And I will tell you, if you're bullish on this sector, on either gold or silver or the mining equities, this is the best setup that you could ask for, to see a nice, slow, consolidating, gentle uptrend at this point, because these moves will have staying power. There is a lot of buying, a lot of accumulation that happened in this range, and so on any weakness coming back down perhaps to the mid 1200s, we have a very strong confluence of support now at this level. So that's why when you see consolidations, especially after an uptrend like this, they are good things to see. Good things to see, especially after the breaking of a long-term downtrend. So it looks at this point, we're not going to look at any of the longer-term charts. We will do that again next week. It looks to me at this point like gold could continue to just gently move higher over the next few weeks, few months, until it has another attempt at 1350 and then maybe another attempt later on in the summer. When will it break through 1350? At this point, I don't have any data to give me any clues about that, except to say that it will. The next surge we see may not do it, and that would represent basically a chipping away of this resistance here. You have the first surge higher, some buyers here surging it higher, and then a certain number of the sellers selling. The next attempt, you'll have more buyers coming in and taking more of that gold from these same sellers, from most of those same sellers. So perhaps it might be the third time, the third attempt, that the next wave of buyers comes in and all these sellers are exhausted and the price starts to move higher. This would be very, very good for the long run if you have a long-term horizon. Might not be so exciting to watch all the time, but as long as we see this gentle uptrend hold, and especially if this were to break, a worst-case scenario, we would want to see this support hold here at 1185 or 1190 in that region. Anything like that would still be basically a consolidation with a bias to the upside, and at that point, this is very healthy to see. Looking at silver, we are looking now at the 3-year view of silver. There is not a whole lot of new price action to comment on, so I want to tell you where we are. I'm still expecting the target from the inverse head and shoulders pattern, the measured target, to be hit at 1850 at a minimum. We haven't hit that yet. The price briefly spiked above $18 a week ago. We have not hit this target. Now, is it possible, okay, so we got to about 1805. Is it possible that that target is not hit right now and perhaps the price of silver takes the dip that I was expecting and it takes that dip earlier than I was expecting it to? Sure, absolutely. That's possible. The message of the market here, though, is what we need to not lose sight of. And just rewind in your minds. I mean, it was only 4 months ago that everyone was convinced that prices were going to continue moving lower. We had targets of $12, $11, $8 being given out. So now as we're talking about the short-term targets higher, let's just remember that there's a fundamental shift that has happened here in this market. We want to not lose sight of that. Let's zoom this in so we can have a better idea of the short run, keeping in mind that essentially at this point, any price action between the consolidation here of 1625, which represented this resistance level, we were watching this for several months back in the winter and the spring, anything between 1625 and 1850 is basically part of the next wave of consolidation that's happening in silver, the next higher consolidation. Just as from the bottom, we then surged to 16 before consolidating between 16 and 1450 for about 2.5 months. We are seeing that now. So does the price go up to 1850 before coming back down to 17? Or does the price come back down to 1650 now before consolidating some more above 17? You're really getting into very short-term calls right now. Those are things that I like to do sometimes if I'm trading futures on a really short-term basis. But as far as investing goes, this doesn't play a whole lot into my day-to-day concern. I'm really looking at what right now is very good support right here around 1680. The reason that we follow this support is it represented the surge in volume that we saw breaking the shoulder, breaking the technical pattern of this inverse head and shoulders pattern. The break higher, this surge that we saw from 1625 up to roughly 1760. You all remember that. That was only about 2 weeks ago. That occurred on record high volume in the silver market, basically high volume going back for a year and a half. So what that means is there was a ton of buying interest coming in at this level. So basically we're calling the strong support where we saw this strong buying coming in. So we would expect that support to come on a worst case scenario basically in silver between this dashed line and this solid line right here. So again, anything within the consolidation zone here, 1620 to 1850, is very valid for the formation of a larger right shoulder that we mentioned 1 week ago, 2 weeks ago. And that will be setting up, when that breaks above 1850, we'll be setting up for a move to roughly $22 or $23. That could be toward the later part of this year. So the topic that I wanted to look at, this is for those who are either subscribers with me in my service, or if you are investing in this sector on your own, or if you're not, if this is just background information for you, and all of those options are fine. We're going to look at some of the volatility because there are a number of people that have begun to express interest in investing in this way. Let's say if you have $10,000 and most of that is in metals, and some people like to take a portion of that and try to hit a few home runs, a few investments that could go up 1,000 or 2,000% over the next few years. And we never recommend doing that with 100% of your physical gold or silver, but for certain individuals, and this is largely an individual question, the risk is worth it for certain individuals. This is what you're going to be getting yourself into if you decide to make this decision. It's like from the Matrix. If you decide to take the red pill, this is what you are going to see. And what we are looking at here is a company, a mining company. I do not own this company. This is not a company that we recommend right now. I'm just using it for a historic example. We are looking at the stock chart of this company over the course of 8 years, basically during the first part of the bull market in silver, where silver went from roughly under $5 an ounce to $49 back in 2011. So this is a company that mines for silver, and they happen to be located in China. They're the largest silver producer in China, just so you know. Now, yes, China has a lot of issues. We're not getting into that right now. We're just looking at the performance of this company from a mathematical standpoint so we can look at what the investment potential is here. So Silver Corp, go back to 2002, was trading at roughly 4 cents per share. On the first spike in silver prices, when silver finally broke above 450 and I believe hit roughly 5, the valuation of Silver Corp went up 1,775%. This is not a typo. It went from 4 cents a share to, what is that? Right under $1. That's 1,775%. In other words, a 17-fold move, roughly. So we're talking about the volatility that we should expect to see in this sector. After that incredible move, when silver came back down into the $4 region, Silver Corp fell 84%. You lost 84% of its value over 4 months. So if you mistimed your purchases and you were buying more like in the highs as opposed to before the company took off, you lost 84% of your money if you sold around the lows. What happened after that? As silver recovered and then broke above $5 an ounce, the valuation of Silver Corp, as it is producing silver, exploring for silver, mining for silver, sticking drills into the ground, looking for new deposits, the valuation of this company rose 1,390% over the following 6 months. Again, this is not a typo. So the price had come all the way back down to 12 cents right here, and then surged to $1.50. That's 1,390%. What happened after that? In 2004, as silver prices came back down, the valuation of Silver Corp fell 95%. Back down to 12 cents. Can you imagine what someone who bought here or here is thinking? They've basically lost almost all of their investment. And very few people would hold on for something like this. But let's say from this bottom, a new class of people come in. And mind you, this bottom was 1, 2, 3, 4, almost 5 weeks long. So it's not like this bottom just happened in one day and then came immediately back up. You had over a month to be buying Silver Corp at 12 cents a share again. What happened over the next few years as silver finally went to $8 an ounce? Silver Corp rose to $8, from 12 cents to $8. Do the math, that's a 5,880% gain. It's staggering. The volatility. Silver prices came back down. Silver Corp lost 50%. It then took another 2 years and it gained 176% from this low. In the crash of 2008, as silver fell from $20 an ounce down to $8 an ounce, Silver Corp fell 87% again, only to rebound out of the lows 1,246%. This is where I was doing a lot of my buying back several years ago. This is how I learned to follow these chart patterns, to follow what was happening in the metals and then the companies that are mining for the metals. So this is otherworldly volatility. That's what we have to call it. Now, not all mining companies are quite this volatile. Many are less volatile, but some are even more volatile. So this is what you should expect if you're deciding to take some capital and putting it into this sector. However, keep this in mind. What was the net result of all of these tremendous moves? If you were buying at the beginning of a bull market and holding on for 8 years toward the end of the bull market, 36,000%. The numbers seem silly. I understand that. They seem outlandish. But the chart is here. This is publicly available data. You can confirm the numbers yourself. And obviously, very few people were buying at the exact lows and selling at the exact highs. But even if you missed half the move, even if you didn't buy until much later and you sold halfway and you made 18,000%, to keep in mind, you had to withstand this kind of volatility. So what I attempt to do, I'm producing this to let you know what you should expect as potentials for life-altering gains, and to let you know that what I attempt to do is to try to take some of my money off the table in and around the highs and buy back in and around the lows. And there are ways, we will never time it perfectly, but there are ways to at least time the significant tops and the significant bottoms. Just to put that into mathematical numbers, if you had rode this company during the bull market for a $10,000 sample investment, you would be looking at $3.6 million by the end. So there are life-altering opportunities. That's what we're attempting to do. No one can do it perfectly every time, but even if we can get something, a fraction of this, there is tremendous opportunity. You just have to be prepared. Let's fast forward this chart, move that through the current bear market. Look what happened. This ended in 2011. Look what happened again to Silver Corp, down 95% again. Down 95% here in 2004. I mean, it's almost unreal when you look at these numbers. So the question is, what type of move is going to follow this? If it's anything approaching these moves here, then there is a significant opportunity ahead of us if you have the stomach to handle this kind of stuff. The executive summary for today. Looking at physical gold, it is chipping away at the 1305 resistance. Chipping away. And if things stay as they are, that level will be broken at some point in the next few weeks, perhaps later on in the summer. Silver. The big deal is that the bottom has been confirmed. We must not forget this. And so the day-to-day action is becoming a lot less meaningful now within this range. There is strong support first at 1675 and all the way down to 1625. In this range here, very strong support, and there is strong resistance at 1850 to 1875. I think the lower that it comes to this, to the 16s, is a better time for accumulation right now. And the higher that it gets, we step back and see, is it ready to surge through that level? My sense is that it may take another few months to break through 1850. And just the final thing, the life-altering gains possible, but prepare for that huge volatility and absolutely a wild ride. So I hope this can help to both motivate and perhaps ease some of the fears. And if this causes you to have more fears, well, that's okay too. We're here together to try to navigate this thing. And there's a lot of good analysts out there. There's a lot of good information. So stick with the best form analysis that works for you. And hopefully we'll come through this all right together. Thanks again for watching. The next update will be a week from today. And I will see you then.